So lots to talk about. We have our guest host, David Kuo, CEO of Singapore Motley and Willem Nabarro from Exane BNP Paribas. Well, welcome, gentlemen. So shall we talk about what the ECB did?
Well, it's the only game in town at the moment. Yeah, everybody is talking about what the ECB has done. And quite frankly, I am not in the least surprised that the ECB actually went down this road. They had no more options. This was the final option that they had. They've tried everything else; it hasn't worked. So therefore, they've decided to go down the route of quantitative easing. Some people call it quantitative easing. I call it quantitative pleasing. Pleasing, because it's actually pleased the market.
It certainly pleased the market. But Willem, if you take a look at the initial reactions, I think traders hesitated a bit because the euro actually bounced off a little bit. Ultimately, at the end of the day, it fell down to as low as about 113.17. How should investors take Mario Draghi's gesture? I mean, does this spell that a new easing era has arrived?
Well, somewhere he's following in the footsteps of what we have seen in the US, effectively quantitative easing or pleasing, like David said. But effectively, it was one of the last options he had. Now, in the past, effectively, he has been talking a lot, but we didn't really see any movements. Now he's really done it. And at the same time, what he's done as well, which is more important, he's implicated the national governments as well.
He was saying, don't make such a big deal out of risk sharing as long as there is some percentage involved. So is that ultimately he heeded market demands?
Well, what he was doing, he was juggling between effectively what we call the periphery, the southern European countries, and what we call the core European countries like Germany. And Germany, what they wanted is especially they didn't want that the German taxpayer ended up paying for all the southern European debt, because that was the biggest crane. And what he has done now, effectively, somewhere he said, okay, to the southern European countries, well, you will need to buy your own debt as well, because we cannot ask everybody to pay for your debt.
How long does this pleasing effect last, in your view, David?
Well, according to Mario Draghi, it will go on until September 2016. But my question is that enough time? If we have a look at quantitative easing in America, it took somewhere in the region of 6 to 7 years before we saw any kind of result. And I think that was probably part of the reason why Japan called a snap general election, because they know that they need another 4 or 5 years for QE to work. Now, in the case of Europe, I mean, if Mario Draghi says it's going to work by the time September comes, that is, inflation is going to actually hit 2%, do you think that's realistic, Willem?
Well, that's also why he said, well, if effectively inflation is going to be there, so somewhere it's an open-ended QE. He didn't really say it goes on till September. So that's why effectively what the market has been understanding as well, during what you mentioned during the day, the markets went up, down, a real roller coaster. But he gave himself effectively the possibility of continuing with QE. If we remember, well, a long time ago, the euro was introduced at 117 and a little bit. We're now trading at 113, and it all fell all the way back to 85 cents.
In 2000.
Exactly, in 2000. If that is going to happen, if effectively the euro continues to fall, of course, all the goods they're going to be importing are becoming more expensive. Now, at the same time, we've got oil, which has been falling, which is, of course, one of the biggest commodities for imports. But if you buy, even if oil falls to $40 a barrel, what everybody's aiming for now, we also heard $25 a barrel. If you pay that at 150 euro, or if you pay that at 85 cents, there is a very big difference. So inflation will start to creep up. With which speed, I do not know, but it will creep up. And that is effectively why he said, well, he gave September 2016, so he's got 1.5 years. With his lower dollar, with the lower euro, effectively, the chances of inflation creeping up is there.